Hi, Harry Dent here on December 20th, just before Christmas, and looking to the next year. I say 2014 is going to be the most important year for a decade past and maybe a decade forward. I think this is when the bubble that governments and central banks around the world have kept going, despite all fundamentals and despite all responsible banking and federal and central banking policies, this is the year when it burst. Remember back to 2008. Everything was fine coming into 2008. The economy was like this. Stock valuations were like this. We were growing okay. We'd had a major bubble burst in 2000 to 2002, but government stepped in, lowered interest rates, stimulated, and we got new bubbles in housing and emerging markets and commodities and all types of things. This is what's happening now, and I'm listening to the news day by day, week by week, and everybody feels good. And everybody's saying, look, this recovery is finally sustainable. The Fed is finally tapering just a little bit and doing just the right things. And I say, no, things always look good at the top of a bubble. And economists, the new Fed chairman, Janet Yellen and Bernanke, and major economists are all saying, this is not a bubble. Earnings are going up. Stock earnings are going up for two big reasons. Companies are buying back their own stocks at record low interest rates where they can borrow or use cash on their balance sheets that they're not investing in the future because they don't see great growth long term. They overexpanded in the great bubble that peaked in 2007 and 8. And low interest rates are increasing their earnings. Artificially a gift, short term at near zero and long term at below inflation rates on average. This is a gift from the Fed. This is not a real recovery. The boom in the 90s that I almost single-handedly called in the late 80s and early 90s before it happened was technologies roaring mainstream like autos in the roaring 20s. It was the baby boom in the strongest decade of their spending. And then after that crash, baby boomers were still spending at a slower rate and technologies were still moving mainstream. This was a fundamental boom that got exaggerated by low interest rates and stimulus and speculation, which always happens in human nature. This time, we've got a totally artificial recovery. Without Fed stimulus, without $3 trillion in QE, $7 trillion in government deficits in the last several years, we would not have a recovery. We would have gone into Great Depression. So what I say is this Great Depression is going to start in 2014. I see stocks peaking in the first quarter of 2014 are actually a little wider between late January and early May at the latest. And I'm leaning towards the earlier side, but we're going to have to continue to monitor shorter term technical indicators. I say this bubble's going to burst. My favorite chart recently came from Business Insider where they put a theoretical bubble progression on top of the S&P 500 since 2010 and 11, and it fits perfectly. And people are saying, this is not a bubble, this is a perfect bubble. Stocks have now gone up 175% since the low in 2009 in less than 5 years, and almost no stock rallies or bull markets last more than 5 years without a major correction, 20 to 50%, 36% on average. This bubble progression says we're going to peak early next year. We're going to go a little higher. So what I do, and if you are not on Boom and Bust or Boom and Bust Elite, which are the newsletters that are very affordable that I recommend, do it now. I'm telling you, this is not for us to make money. You need to listen to us over the next several months because we are very contrary, and we don't always intend to be contrary, but we have to be at this point. This is an obvious bubble. Everybody's in denial about it. Nobody wants the bubble to end. And the Fed's starting to taper. Bad loans in the worst parts of Europe are only going higher. China has got a bubble out of control that the government can no longer temper because the private sector, shadow banking, just like created our subprime crisis in 2007 and 8, is feeding this bubble. There are many things that could go wrong, but the most important thing I'm looking at, I have many long-term and intermediate cycles, and I'm telling you right now, for my entire career, I've never seen cycles line up like this, and I don't have time to go in this here. but all of our major long-term cycles, demographic, geopolitical, commodity cycles that even affect the third and world emerging markets, a 10-year cycle that we have now re-innovated from Ned Davis and found a better way to forecast a very powerful cycle, which should have come in 2012, but now by our calculations is going to hit 2014 to 16. So I can't tell you exactly now when this bubble is going to peak, but I'm saying it's going to be probably in the first quarter of next year. I see a recession by the second or third quarter of next year. I see the final bubble bursting. 87 was the first. The Fed stepped in and stimulated. 2000 to 2002, the tech wreck stepped in and stimulated harder. 2008 and 9, the last bubble, stepped in even harder with unprecedented quantitative easing around the world. Governments are tinkering with Mother Nature. They are going to fail. I show in our newsletters and my new book, The Demographic Cliff, coming out on January 7th, how demographic trends are going to get worse for the more affluent people in the United States that are still spending, and they're going to get worse in Europe and many other countries. This demographic cliff is going to work against central banks and government stimulus. I say the bubble is going to burst in 2014, and when it does, it's going to last for a couple years, and the next bubble burst is going to be worse than the last, precisely because governments have propped it up artificially. Note that every bubble in the last 10 or so years, 2000, 2007, and now 2013, early 2014, every bubble's gone to higher heights and every crash has gone to lower lows. So you need to reevaluate everything about your investments and your business coming into 2014, and note that finally gold is trading opposite to stocks as it normally does, and there's going to be some very interesting opportunities between gold, stocks, and don't think the real estate downturn is over. It's going to go much lower, and interest rates are going to go higher before they go lower. So there's a lot of really interesting trends. Again, listen to us now if you're ever going to listen to us. And if this bubble doesn't burst, as I say, by the summer, we will change our forecast, and maybe the government rides in and you know, keeps this thing going again. I say this will not happen. I say the bubble's finally going to end, and it's going to end starting in early 2014. So again, get ready. Huge opportunities if you see this coming. And again, if you're ever going to subscribe to Boom and Bust or Boom and Bust and Elite, now is the time to do it.